Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. This week's interest rate cut has delivered a bit of relief to homeowners, but what about small business? What's it mean for them? There were positive signs for Australian businesses at the end of 2024 and early 2025, according to the latest Business Risk Index from CreditorWatch released today. But that positivity might be short-lived. Patrick Coghlan is the CEO at CreditorWatch. Patrick, welcome back to Fear and Greed.
Thanks for having me. Always good to be here.
So just up front, what's the effect of an interest rate cut on small and medium-sized businesses?
At the moment, it's probably psychological more than anything.
Yeah.
I think it's the we've often spoke historically about there being two horizons to a recovery. One was, the first rate cut, and then the second was probably actually starting to see that additional funds flow into the pockets of consumers.
So what you're saying, psychological, do we need a bunch of rate cuts for it to make much of a difference?
I think it releases the pressure valve a little bit. Okay, this, we're starting to get better. The worst is behind us. I think we'll naturally see a little bit more spend, and ironically, the industry that's copping at the worst at the moment, hospitality, is most likely to feel the positive effect of that first, because I'm going to get my second coffee in the afternoon. I'm going to get my sandwich from, the local cafe. So I think it is psychological in terms of, having the biggest impact, but we will start to see some actual financial impact as a result as well.
Something to look forward to. Take me through the headline figures from the latest index. Bit of positivity in January. Good to see.
Yeah, that's right. It's nice to finally start talking about some positive numbers. We've often said if things are going sideways at the moment, that's certainly a positive. So we've seen a leveling off of trade payment defaults and insolvencies. Of course, this has been adjusted for seasonality, but December and January, as a caveat, is often quite an uncertain period. But we are seeing, strengthening numbers from a retail sales perspective as well, and arrears do unfortunately continue to trend upwards alongside court action. So a bit of a mixed bag, but I think where we're not going backwards, that's certainly a positive.
Okay, there was a drop-off in the number of insolvencies and trade payment defaults, though, wasn't there?
That's right. Yeah, those two sort of lead indicators of pain that's being felt is certainly the positive to take out of this. Trade payment defaults, just for your listeners, are a black mark or a default being lodged by a creditor against their debtor for non-payment. So that's often the first red flag against a debtor that is heading towards administration. So if we can see those come off, naturally we will see less administrations, insolvencies in the future.
One of the great things about your data is that you can actually split it into sectors. So you talked about hospitality. Broadly, who's doing well, who's not?
Yeah. So the big names like manufacturing, for example, agribusiness, which has often done it tough over a number of years. They're just so, exposed to weather and, floods and, locusts and all of the plagues and whatnot. It's really
very
tough.
Biblical, Patrick, very biblical.
That's right. They're having a good run at the moment, which is great, not to obviously jinx them. Manufacturing, of course, be interesting to see, with tariffs, whether, even more comes back onshore as a result of the tariffs. And of course, healthcare is performing well. At the other end, obviously, hospitality, by far and away the most impacted industry of the lot. And then construction sort of, it's a sort of split down the middle. Residential's very slow at the moment. A lot of people trading down in terms of, instead of putting another level on, they'll just renovate their bottom level. Instead of, doing a kitchen renovation, they might just, spruce up the bathroom a little bit, that sort of thing. So part of commercial is doing well, but there's obviously plenty of pressure on, commercial landlords.
I noticed that the big property companies have been reporting the last few days. Now, this is the other end. This is the large business, not the small business. But it certainly seems to be residential that's struggling more than office even now, or more than retail now.
That's right. And they're just so exposed to consumer spend.
Yeah.
We're seeing far less, new builds and obviously renovations taking place as well. And that's twofold. One, consumers are spending less. Two, it's really expensive as a result of the inflation.
Stay with me, Patrick. We'll be back in a minute. My guest this morning is Patrick Coghlan, CEO at CreditorWatch. So we've been talking about what's been going on. Let's think about the future. What are the big factors this year for businesses as you see it?
Probably the first one is the same big factor that we were hoping for last year, which is another rate cut.
Yep.
We are at that elevated level, so we want to see that continue to come down. Inflation, everyone wants confidence that is under control, and we don't see that start to go back up. And then I think there's a lot of capital that's being held onto at the moment by investors, private equity, VC. The IPO market's closed as well. So if we can start to see that get spent, get distributed, new businesses get started off the back of successful IPOs and whatnot, where employees go out on their own and start their own. So there's a whole ecosystem that's connected there. So they're probably the three big ones for me.
What about things like an election, a federal election? Does that worry people? Do people not spend as much just in case?
That's a very good point. I think the biggest problem we will have out of that is not necessarily the natural slowdown through an election cycle. The good thing is it's likely to be short, right? Yep. Even though we're technically in a shadow one at the moment.
Yep.
Is a hung parliament or minority government. It's always challenging because we know that a lot of bills get held up and there's a slowdown, and so that's probably one of the bigger challenges that we might face.
Does the legislative agenda, particularly around industrial relations and stuff like that, does that sort of thing make much difference? I'd imagine in things like construction, retail, where they employ a lot of people, if there's uncertainty around that can't help, I suppose.
Yeah, that's right. I think it becomes quite granular, right? You start to see, manufacturing, industrial, construction get hurt with, just red tape, or they just go, I'm not going to hire people because it's too much hassle or it's too expensive. So you then start to see a lack of investment. So red tape across any industry, any state, national level, et cetera, is always very painful, but it often takes a bit of time to actually come into effect and then really be felt. Businesses are pretty savvy once it does come into effect of operating in a new sort of paradigm.
And what about the Donald Trump factor? We talk a lot about it, but does it actually matter that much?
Look, not yet. I think there's some, Australia's the lucky country. We obviously have a huge amount that we dig out of the ground and sell overseas, which keeps the economy afloat in tough times. We're very strategic as well. So I don't see it having a big impact, but in saying that, who knows what, the president's thinking.
Yeah.
I think he's the ultimate businessman,
yep.
which I think should be a positive that people look at, because if a deal's there to be done, he'll happily take a deal and look at the positive PR off the back of that as well.
Okay, so the prognosis for 2025 from where you see it, and you get a lot of data and you know how small businesses, medium-sized businesses are travelling, what do you reckon the next 12 months holds generally?
Look, I think it's still going to be really tough for the run through to the end of financial year, particularly for small and medium businesses. The rate cut, even if we got a second rate cut, it takes time for that to flow through to obviously the mortgage and then the consumer's pocket, and then for them to have confidence and then to start to spend. So certainly through to the middle of the year is still going to be exceptionally tough. But then I think we start to see improvements from there as the purse strings, both consumer and commercial, start to be released. More hiring, if that's even possible, at the current unemployment rate. And just in general, probably more investment. And that's not just investment from an IPO, capital markets perspective, but also, buying machinery, investing in technology. While we're in this really tough phase of, high interest rates and uncertainty, even good businesses will tread water just to see what is coming. Once they've got that, that foresight and certainty, they'll start to spend, which is great for everyone.
Patrick, thank you for talking to Fear and Greed.
Thanks for having me again.
That was Patrick Coghlan, CEO of CreditorWatch. This is the Fear and Greed Daily Interview. Join us every morning for the full episode of Fear and Greed, daily business news for people who make their own decisions. I'm Sean Aylmer. Enjoy your day.